Yeah, just एक second.
Oh,
How do
okay.
we? Just
Fine. Yes. The broadcasting has been started. You can continue. Just a second.
hello, hello, hello. Hello.
Yeah, Yash.
Yeah. So, is everyone here?
Yeah, everyone is here and
Yeah. So, thanks, guys, for taking out time and organizing this. Really appreciate this. And just just a bit of introduction. I'm one of you, as all of you know. I mean, was at Roorkee 3 years back. Yeah, 2013. I passed out and was with Deloitte, and then was with Flipkart for a couple of years. Then I've been with Kalaari for about a year now. So yeah, that's about it. And the experience has been really amazing to witness. I really feel bad that you guys are out there in Roorkee and you don't get to see, witness what's going on firsthand. Especially if you were in Bangalore or Bombay or Delhi for that matter. But it's great time to see all of these changes, in front of my eyes, and surrounded by really amazing people, really amazing founders, people I know, people within the network, and understanding how things are moving, getting a good overall view of a lot of things, I would say. So, as the theme of the session is that what are the startups for tomorrow, right? So I'll just, quickly start with what has happened in India in last couple of years, right? So one thing that has really, taken off by surprise to everyone around the world is, the massive adoption of mobile, right? We've gone from zero, number of users to about, I think, 150 million smartphones today, and people have gone on the internet. So, the broad India thesis is, so if you look at the global economies today, I'm pretty sure I've been to US. If you are in Nashville or if you are in New York, you'll get Best Buy, you'll get Ralph Lauren, you'll get Nike. So the penetration, the physical assets, the capital expenditure on assets happened in 70s, 80s, which expanded the economy. Right? Best Buy is there, right? India is leapfrogging that. So the gap which is there of the physical infrastructure today, right? You have to be in New York, Bombay, you have to be in Delhi, you have to be in Bangalore to see, you know, uh, some level of infrastructure. I mean, you only get certain things in Bombay, Delhi, right? You don't get that in Turkey. So that is being leapfrogged by digital today, right? India, from like, the best example is landline. I'm sure there were about 80, 90 million landline connections in India, and suddenly, smartphones have taken that over. So that's the main India thesis, that the gap which is there in the Indian economy, digital is going to fill it. We're already seeing e-commerce getting massive traction and being adopted. You see, so the earlier thing I was talking about, that Ralph Lauren being available in smaller gaps in US. Today, that Flipkart enables you to purchase a brand which is not otherwise available in Turkey, that is directly delivered to your doorstep. So that has really happened, right? So that has been the major. Hello? Oh, okay. I think someone is not on mute. Hello? Yeah, yeah, we're good. So, So that has been the major, India thesis that digital is going to really take off, and that's what, a lot of us, including some of the larger VC funds, larger private equity guys betted on, and they took bets on Flipkart, Snapdeals, and other, digital form of adoption. So e-commerce has taken off. People tried their hand with services. So after e-commerce wave, I think US May there was this big buzz around services taking off. I think there's the same thing happened in India. People tried startups like House Joys, all kinds of services. People started doing that in India, but that hasn't really worked. So now what people so the next waves that at least we feel at Kalaari are going to be around e-commerce enablers, right? And uh, so within e-commerce also there was horizontal e-commerce, and then there were vertical e-commerce. So if you see a consumer, right from adoption of the time when he comes online, he transacts categories like, if you don't know, shoes is the shoes and t-shirts are some of the first categories the consumer shops when he comes online. And sort of when he evolves in his online journey, there are categories like furniture, complex stuff like jewelry, that's when you start transacting online. So if you can replicate the same behavior to some of the people or yourself, what was the first thing you bought when you came online, right? It was a category which didn't involve a lot of uh, what do you say, engagement. It was an off the shelf buy, and then you're starting towards buying complex products like uh, your next shaving kit, reading a lot of research, reading a lot of content around it and seeing, okay, this really fits. That led to vertical e-commerce, categories like lingerie, categories like jewelry. A lot of categories took off when evolved consumer came online. So now people, the other set of waves, if I were to put it that way, are what is going to enable this e-commerce ecosystem, right? And we think payments and logistics are two big areas where there is a lot of work which is required. Payments still, CUD continues to be a very large component of e-commerce shipments, and there's a lot of problems around cash reconciliation and how that cash moves. Even there's a lot of technology which is being reimagined on the payment gateway front. We know already there's a startup you guys must be fairly familiar with, Razor Pay. So payments is a big piece, right? And even today, right? UPI recently, I don't know if you guys had a chance to try out UPI app, which was recently rolled out. So the major idea around this is to take that payment, digital payment, to a lot of places, right? So when you India Post delivers something in a pin code, which was, I don't know, maybe somewhere in the interiors, even deeper than Roorkee, you should be able to pay online. And UPI, I think, is a good step towards enabling that. There's a lot of work that needs to happen in logistics. Even today, if you want to dig deeper, logistics is a big behemoth in itself. If you want to understand logistics, I think we need 2 3 hours separately to go through what is FTL, schedule runs, how the network planning is done. Very big, very complex. There's a lot of players, trying to solve that problem in that area. So I think macro wise, those are the 2 3 big trends that are going to, I mean, anything around e-commerce enablement, right? Because it's tied to the initial thesis I was telling you, that digital adoption, which is through e-commerce, and then how you can enable e-commerce. The other thing that we are especially witnessing is content. I think content is going to be really big, because I mean, think about it, right? 4 years ago, the kind of content you consumed and the pace at which you consume content, hasn't that changed? I mean, I think TV is out of my life. I don't watch TV anymore. It's all YouTube. I just browse TVF stuff, right? So content is changing. I mean, imagine, the pace at which videos are coming out today. There is so much content available for consumption, right? Internet has become accessible. People are browsing content on 2G. I mean, I'm surprised, yeah. When I went to college, I had a feature phone. By the time I got out, I had a smartphone. So I'm sure people who are getting into college today already carry smartphones with them. And my mom messages me on WhatsApp. So that curve has changed, right? People are really online. They're consuming all the more content. And there's a big discussion around what are the monetization models around content. That's a little deep diving discussion as to how do you monetize content. There are different models, there are different ways, different strategies that people take. Okay, this is how I want to start making money on stuff I produce. So that would be content, right? The other thing that I really wanted to stress about today, that personally I feel is going to really make a difference, is what's going on in the fintech in India. Really, absolutely. So I'll just give you a quick background. So if you see how e-commerce has taken off, it was not simply copying paste what happened in China, what happened in West. COD and India specific product was invented, right? There was no logistic ecosystem that was there. So Flipkart went on, started its own logistics ecosystem, which was e-cart. So those things were built from scratch, and those things were a lot focused on the nuances of India itself. So in fintech, what has happened of late is, people just copied a lot of what was going on in West. By West, I mean typically United States or European economies where, a lot of stuff was going on around lending, P2, payments, then you have personal finance. So people just went about, copying what's going on in US. I'm going to do that in India. But if you look clearly, I mean, that's what we've spent a lot of time studying this industry, that US and India are fundamentally different. You take any metric out there, take consumer debt to GDP, right? Take credit card penetration, take debit card penetration, take insurance penetration. The Western markets are, the number of bank accounts. The Western markets are at what do you say, 75, 80 suboptimal levels. The penetration of these products is deep, whereas in India, the penetration is abysmally low. I mean, if I remember correctly, the health insurance penetration is about 10%, general insurance penetration is about 20%. There are only 500 million accounts in India. Bureau penetration is 20%. Bureau is your CIBIL scores, equivalent of so only I think CIBIL only has 200 million scores in India. So if someone wants to take loan, he doesn't have a CIBIL score today. So there is a very fundamental infrastructure challenges in India. So the problem in Western market is the solutions that are there in Western markets are about being cheaper, faster, and better, right? Because there are already existing players. You are competing with a bank to provide a remittance solution cheaper, better, or faster, right? It's not about creating a market. That customer was already a customer of a Western Union. You're just giving him a cheaper service. That's why TransferWise exists. If you, I mean, it's TransferWise is a very interesting model. If you should go look that up. All the models, all the successful companies like Social Finance, Sophie, it wasn't as if people were not getting student loan. The whole idea of Sophie is that I'm going to give you a student loan in 15 minutes. That was the whole pitch. That's why it's taking off. But India, the problem is the penetration is not there. You're creating that market. You're reimagining that market. You want to take that 20% to 80% to 70%. And how that creation happens, you have to have that infrastructural changes in place. And that is what, that's going with UPI, Aadhaar, eKYC is really going to change financial services in India. And that's typically, I think one of the major makeshifts in the economy that's going to happen, and a lot of businesses would be built around. And the best way to get a sense of what's going, Nandan Nilikani recently gave a talk on this, and I think he has also put his deck on the internet, which talks about public banks not innovating. There's a whole opportunity for private banks and startups to capture this massive growth in the market. So he himself predicts that the consumer loan book in India today is about 200 billion, and it's going to go to $2 trillion. Somebody has to create this market. Somebody has to build services and business around this market. So the underlying infrastructure that I was talking about is India Stack, right? How many of you guys, I don't know, if you don't know about India Stack, you should definitely go look it up. It's the website is indiastack.org. So India Stack is nothing but a set of publicly available UPI APIs, which includes Aadhaar, which includes eKYC, which includes UPI, which includes consent layer. So the whole idea is that, so just let's just sit back and see if this was not there, right? And today you are supposed to give a loan to some guy sitting in what is that place near Roorkee? Uh, Okay, Haldwani, let's say, right? For the lack of my GK, there's this place Haldwani. So let's say if ICICI Bank or a HDFC Bank has to provide a loan to a consumer sitting in Haldwani, right? He has to physically be present there because there is a whole aspect of signing documents, customer onboarding. So the cost of acquiring and cost of transacting with the customer is so high that, the ticket value of the guy, 1,000 rupee loan doesn't make sense for a bank to open a branch and acquire this customer. But with UPI, I'm going to identify this customer online through Aadhaar. So identification happens. I'm going to do my KYC through, India Stack. Yeah, SEBI, IRDA, RBI have all approved, completely online customer onboarding. In fact, in India today, you can open a mutual fund account in 15 minutes, completely online, right? You can identify this customer and you can collect your EMIs from him through UPI, right? So that's the magic. I mean, the cost of acquiring, transacting, and services customer has gone from, I don't know, X to 0.2x to 0.1x. And this really brings an opportunity for all of us. Your EMIs from him through UPI, right? Okay, someone is not on mute. I mean, the cost of acquiring, transacting, and services customer has gone from, I don't know, X to 0.2x to 0.1x. And this really brings an opportunity for guys, get on mute. I can hear my own sound. Yeah. Yeah. So, and this really brings an opportunity for all of us to reimagine financial products, not the way it were in West. So today, this consumer who's the same consumer I was talking about, he has a working capital problem. His income is not stable like most of us. Some months he earns 10,000 bucks, some months he earns only 5,000 bucks. So he need that working capital, right? Suppose there is a medical emergency for him, he's gonna need a 2,000 rupee loan. So who's gonna give that 2,000 rupee loan to him? So it's a whole array of financial products waiting to be built for India. So now can you use all that infrastructure and come out with India specific financial products like a 100 rupee insurance, like maybe a prepaid card which is valid for 24 hours, different insurance products, right? And you can always use the distribution channel which a lot of these guys have built, like Flipkart. You can always, so Flipkart alone today has 25-30 million users. So the distribution also becomes easier because you're collaborating more and some shared economy. So if you are built, so as a startup 20 years ago it would have been very difficult for you to penetrate, right? Today that distribution problem is solved for you. If you have a product, somebody is willing to underwrite it and somebody is willing to distribute it. You just become that central layer where you collate data, do a lot of analysis, and facilitate that transaction, so to say. So in my mind, I think financial services is really going to take off. India, and look at it. I mean, you read any growth factors, macro growth factors in any economy, you'll see credit is very important. The more you influx, so I don't know how many of you are aware with economics. So there is a metric called consumer debt to GDP, right? Consumer debt to GDP in US is about 80%. So for example, US economy is about $20 trillion. So $16 trillion is consumer household debt, which is in form of mortgage loans, auto loans, debt which a consumer takes. Because so the whole idea of credit is that it fuels economy, right? So all the jingbang that we're talking about, India is gonna grow at 8%, this is gonna happen, we are going to do this. Financial inclusion must happen. That's a key to growth of any growing economy. People should be able to take credit, people should be able to, save for their retirement. it all feeds in. So I think financial services sits at the bottom of everything which is going to, take off in India. And with UPI, India Stack, whatever is going on, I think it's once in a lifetime opportunity for all of us to come together again and reimagine financial services. So that would be you can I'll just send you this article. We have written extensively about this. Mm, yeah. So I'm just gonna send you an article that we've and yeah, so one question a lot of guys were asking, what is Kalari looking for? So one of your answers would be that we are looking for, teams, startups which are reimagining financial services, which are thinking about, using India stack and coming out with financial products or something which really takes increases this market penetration. Yeah. So I think what else would you like me to talk about? There were other things, right? Hello? Okay. Hmm. So there was this one question around what should we do to start up? Okay, so let me solve this one myth, okay? Starting up is not easy. Trust me, you should do when you really want to. I mean, like you're absolutely sure you want to do this. Sitting on the other side, I used to think, yeah, it's so easy. I should also, see my names coming in newspapers that my startup raised Series A. But trust me, that's difficult. So there are a lot of metrics that float around. That of 100 startups, only I think 20 or 17 get to Series A in India, and of that 20, I think one or two gets to Series B, and then I'm talking about the funnel. So it's very difficult to really do something. And so I'll give you a very realistic picture. Okay? So let's say you are a VC or okay, your job is to return money to your LPs, right? We also have to make money for our LPs, right? And then there is this team of three young graduates out of IIT that comes to me, boss, I'm gonna build a logistics business. Okay, I'm said very good, good technology. But when you go on the ground, logistics is a very dirty business. I mean, you have to bribe so many people. You have to understand how VAT, GST, all of these things work. I'm gonna say, okay, but it's a very complex business. It's a lot about execution. And at the same time, there's a team which is maybe 15 years experience each, guys who worked in FedEx, DHL. They come and say, we understand this, we find out a problem. We were part of this problem, and now we want to fix it. We want to build a solution. Obviously, I'm going to bet on the other team, right? So you have to be wise in choosing, picking your bets, especially in a country like India, which is the execution is very difficult. Like B2B selling is very difficult in India. People think, okay, I'm going to sell my products to. I used to, really myself used to think, there is a lot of opportunity. Why these lot of mom and pop stores that are out there, nobody builds solutions for them. I'm going to build a solution for them. I'm going to, build an accounting software. I'm going to build a loyalty software. I used to think. But if you go and actually do, it's very difficult. The amount of sales effort that you put in cracking this client versus the value is going to give you in his lifetime as your customer is very less. I'm better off selling to a shopper stop rather than selling to 200 these small clients. So the dynamics of India market are a lot different, right? So you have to you have to be really wise. And if you are really excited about an idea, you should really think about getting the right team together, right? If your solution is sales centric, you need a guy who understands sales. You need, otherwise, as VCs ourselves, when we assess a deal, right, we really look at what kind of team are we betting on. Is it, if it's a sales heavy business, there needs to be a sales guy, who's very good at selling things. If it's a tech business, right, you can't really build a tech business with founders having no tech experience at all. There are startups which say, you give us money, we're gonna hire next to high hardcore techies. No, it doesn't work that way. The tech guy has to be in the founding team. So team is very, very important, trust me. Especially for you guys, when you come out and pitch to people, and you think about team is becomes an utmost importance. And we are more comfortable betting on young teams which are building tech product based companies, right, which are big on technology. Yeah, I mean, I think we are more comfortable when more comfortable would be a loosely said word, but yeah, we are comfortable betting with some three of you or four of you guys coming together who are very good at technology and are saying, okay, I'm gonna change something. There's a tech loophole that I found, and I'm gonna change it. Yeah, maybe. So that would be my advice, that you really need to get the right people, right advisors who have to guide you, and network a lot, guys. Trust me. I mean, a lot of I feel that as a Roorkee alma, I feel we suck at networking. We really suck at networking. Trust me. You should, when you're starting up, you need to talk to a lot of people. You need a lot of mentors. तुम्हारे पता है 5 first clients, if you're well networked, ऐसे ही आ जाएंगे. You write to 5 seniors, sir, I want to do a POC with you. If you are building a fintech solution, if you have networks, investment banking, folks in SBI, wherever, you have access, right? So network a lot, know a lot of people, and that's really the advantage of being in Bombay. That's really the advantage of being in Bangalore or in Delhi. Why IIT Bombay produces so many startups? Because they are sitting there, right? Their seniors, a guy of the same hostel or the same wing is out there sitting in Hiranandani running his own company. Always go and ask him, "Whoa, boss, what are you doing? How did you raise your funding?" So that really helps. So you need to really, do something about this. Maybe do a lot of these sessions, talk to a lot of alumni, get something around, them coming to the campus and talking. So that would be what I would say are a couple of things that one should take care of as a student who is looking to start up. And don't start from Roorkee. If you're serious about it, pack your bags, move to Bangalore, Bombay, or Delhi. You need to be where all the spotlight is. There are events. When you're here, your network grows. You are within the community. You meet so many people. They help you. You help them. It's a good community to be in, right? Uh, yeah. So there is a question around, what did I do to become an investment analyst? Okay. So I'll park that question towards the end. I'll try to answer a lot of questions around, uh, so one question which I found interesting to answer was, a lot of people were saying that, a lot of these startups bleed money, right? So even my dad asked me this question, how does it make sense? Flipkart loses so much money. Why are you, will it, really scale? See, guys, the idea is the whole digital theory we talked about, that the massive adoption, right? There's a big market waiting to be unfolded. ठीक है? And when the stakes are so high, obviously, right? Anybody who has the power is gonna want to join in. Is gonna want to be a party to whatever is going on, because you see all the matured economies, there are not really investment opportunities out there. I mean, yeah, US VC scene is okay, but a very nascent early markets give you a lot more returns, right? So that's a whole, I mean, that's a different topic for a different day. That's the whole money cycle. How the earlier you are into something, the more money you make, because the risks are higher and your rewards are higher as well, right? So everybody wants to make money. Yeah, you can say there was a euphoria because everybody wanted to kill competition. They burnt money, they acquired customer, but the whole VC model is based on rapid expansion. And when you are in a VC model, it is expected of you to burn money, get to that level of scale, and acquire customers. So so a lot of times I look at, I mean, we are getting more serious about our companies burning money. So there's a metric we look at which is called customer lifetime value versus cost of acquiring customer. So it's really a cohort of, let's say you spent about $100 on acquiring your 100 customer, right? So for acquiring those 100 customer, net you spent about $1. So that becomes your customer acquisition cost. And let's say within that year 50% of those customers drop, they never come back, and the rest 50 end up placing 4 orders with you. So 50 customer places 4 orders with me, that's about 200 orders, and your average order value is about, let's say, $1.5. So the total revenue you made on those customers about $300. And let's say your business is at 20% contribution margin, or let's say for the simplicity of math that your business is about 33% contribution margin, which is all your direct and indirect direct cost of fulfilling your product. So essentially net you made $100 on that cohort, and you spent $100 in acquiring it. So your lifetime value to CAC metric is 1:1. And the higher this metric is, the better my business is. Right? So the cost of acquiring those 100 customers is justifiable because that those customers at contribution margin level are yielding $100 for me. And I spent $100 on them. If that number was, let's say, $200, it's even better. I'm gonna spend that, the same cohort is gonna yield me $200 versus me spending $100. So that's a lot of, uh, there's lot many things how these things work when you do numbers, when you see that, okay, we always spend money for that inflection point. So for example, a business like Prisma, right? The app which was getting very popular, unless those network effects kick in, I'm not going to be able to monetize. I'm not going to be able to make money because it's a freemium model. And freemium model only works when you have 100 million, 200 million users coming into the system, which active time, average session per time so high that there are publishers who are waiting to advertise on a platform. That's really when you start monetizing. So they want to chase that number, especially freemium model. So there's a lot of money which is spent on marketing, getting users, increasing the activity. So it's a whole monetization question, and there are a lot of monetization strategy vis-a-vis the kind of business you are in, right? It's a very interesting conversation to have. We can probably do that once we have more time. So I'm gonna I hope that I've answered a lot of questions on that front, that why startups burn money. Okay, and I'm gonna look at that sheet. What are other questions? So I think rural India, there's a lot going on in agri tech. See now, guys, I'll tell you how at least we evaluate sectors. Okay, first of all, it starts with what are the macro drivers that are causing those massive changes. Right? See, we are not here to play in economy जो ठीक है यार 100 से 104 हो गई अगले साल में. No, यार, that's something that doesn't excite us. We are in for markets which gonna take from 100 to 500, 5x, 10x kind of a growth. For that to happen, there has to be a massive shift in the macro drivers. Like I was just explaining you what's going on with India stack, right? It's opening up a whole array of businesses to be built. So agriculture may again we when we look at the sector, we study, okay, what are the major macro trends. So I think one of the interesting thing that at least I thought is GST coming in, right? It's gonna really impact the transportation leg of whole agriculture supply chain, which by the way is really inefficient. Okay, I think 40% of the agriculture produce is lost in transit. So that's one. This financial services that we were just speaking about is gonna really impact agriculture credit. And again, coming back to the same thing, credit really drives a lot of things. If you go back and study agriculture today, why it is the way it is today is because the farmers are really tied to middlemen because of this whole credit problem. It's a whole of unstructured credit issues. That's one. Recently, there's something called as an APMC Act, which is called Agriculture Procurement and Marketing Committee Act of Government of India, which mandated all the farmers to sell their produce in Anaj mandis, which has 7,500 Anaj mandis in India. So that act has been amended. So today you can go directly procure produce from farmers. So there's a whole lot of stuff going on in reimagining that supply chain, right? I don't have to go to a mandi. I can directly procure from farmer. I can take produce directly from farm to consumer. There's a lot of friction around because I think in our mind, credit is the major problem. If you can't, if someone's able to fix their credit, then these, adjacent start coming in, and then we'll see a lot of stuff happening in agri credit. But yeah, it's a good space to take a look at, figure out what's going on. Maybe there is an opportunity that's interesting to look at. Right. Hmm. Uh, yeah, and how do you understand problems? See, one thing is you should read a lot. I mean, I read a lot. I'm a voracious reader, from Economist to Economic Times to lot of books to talking to so many people. I spend a lot of time in talking, reading, and then taking all the inputs I get, discussing with the folks at the firm. Okay, this is what I hear. This is what's going on in my mind, and I think maybe there is something. So there's a lot of brainstorming behind all the stuff I said. I mean, it just didn't come out to me like, I just woke up someday and just thought, oh, there's a lot of brainstorming behind whatever I said. Within all the folks within the firm, we brainstorm a lot, amongst ourselves. We do a lot of whiteboarding sessions that this is what's happening. And I think if you are really, really serious about figuring out an opportunity, or get everybody in a room and just brainstorm. I'm sure you'll find a lot of things. So understanding the problems, go out, meet people, talk to. Uh, See, one of the things that you guys don't realize it, as a student who go to IIT Roorkee, you have a lot of power to email someone, or ring up someone, get connected to someone, and really get their time. They would want to listen to you. I mean, you can use your alumni networks to say, boss, I was looking to connect to someone. Can you help me connect? I was thinking about this. People are generally very, very open to discussing stuff with you. You can't really, unless you're Zuckerberg, you can't be sitting in your hostel room and thinking, I'm going to be a Zuckerberg, an idea will come to my mind. I'm going to invent the next big company out of my college. No, I don't think, I don't know. The idea is to be out, talk to people, and yeah, that's how it works. You slowly start building on things, your own way of thinking, and maybe something strikes. Yeah, that would be what I would say would really help you guys understand a lot of things. Yeah, I'll just see if there are other green questions. See, manufacturing. See, there's a lot of manufacturing that's happening today. There's a lot going on in robotics. There's a lot going on in uh, reimagining a lot of consumer products. People are coming with wearables. People are reimagining manufacturing technology by IoT, doing efficient solutions. See, the problem, or I wouldn't say that's a problem, but it's not a VC investable model, I would say, because again, the kind of investment that model in terms of capex, in terms of the growth, again, there's B2B selling involved. You need to sell to industries. There's a lot of investment in R&D. It becomes a very complex model to be investable through a VC money. That would be it. But I'm sure there's a lot going on there. I heard Padma Shri Warrior talk about that the wave of hardware is gonna come back, right? So in hardware sense, I can tell you where at least I see VC opportunities in IoT. I think IoT is one area where from the hardware centric play there is some opportunity. Uh, See, IoT is a very complex industry. Again, I will have to spend a lot of time in terms of helping you guys understand how it works. So right now, in just to summarize what IoT is, I would say the way startups are looking at IoT today is about a lot of, you hear about them building their own hardware solutions, sensors, and attaching it to a device and then putting a data layer on top of it, and that whole solution is built. So I'll just give you one analogy to it. Think about computers in 2005, 2004, or even 2003. You use modems to make computer connect to internet, right? You made an existing hardware uh, modern, or so to say smart. But today, if you look at computers and mobile phones, they are by default smart, right? I mean, nobody thinks of building a computer without having connected capabilities. Nobody thinks of phone without building Wi-Fi or data sim added to that. And that's already happening to cars today. If you see, most of the high-end cars, they're by default connected cars. They have some app that comes with them. You can monitor and stuff. So in at least in my mind, or in I think this hardware is gonna get wiped out. It's gonna get integrated to the device itself, to the OEM itself. I mean, AC fridge that's gonna get manufactured in 5 years time or 10 years time is gonna be connected at all by default. So there's a lot of play around building those horizontal software layers on top of it, the IoT platforms, then your networking protocols. So how will a Samsung AC talk to an LG, hardware? So there's a lot of work that Googles and Facebooks of the world are doing in terms of security protocols, that data exchange protocols around IoT. And I think there's a lot of merit in building a domain kind of a solution. Boss, I am a team. I understand energy very well, and I'm going to use energy management kind of an IoT. And by the way, that's the only area which is getting a lot of traction in India. So energy management is big, right? So these guys, as they evolve, so the hardware piece, they also know that's going to get wiped out. So they're designing their software layers in a way that the software is capable to talk to, a Siemens smart meter, to a Schneider smart meter, to any smart meter that comes, which is built on those standard protocols. So where they are focused on is understanding that energy specific data, how that data is analyzed, how that data is processed. And I think in a lot of areas where you see hardware plays, I think data is going to be a major driver of revenue, of major driver of valuations. How much data you have, how well are you able to process the data, what are you able to deliver using that data. So even as if when a lot of you guys are thinking about hardware, startups, always think about hardware is okay, it's one way of getting the data. How can you monetize that data, create an ecosystem where you're using a lot of data, and monetize and build services on top of it? Because hardware is something which uh, gets commoditized, right? Hardware is something, unless you are Elon Musk, you're building Tesla cars, right? Which is a different story. Yeah. So I think that I hope I've answered that question. Just if I didn't continue. Yeah, so there's a question, do you think that the hype of service startups is justified? See, there is a see I can tell you my view, just completely my view. It's my own thesis. Okay. So if you look at your traditional businesses, right? Your Marriott's or your Reliances of the world, any business can be divided into three major things. One is technology, service, and asset. Largely, mota mota. Distribution inherently comes, right? So mota mota, if you divide a business into technology, asset and services. So traditionally जो भी businesses बनते थे वो थे कि मैं सब चीज़ करूँगा, मैं technology भी मेरी होगी, asset भी मेरा होगा, service भी मेरी होगी. JW Marriott's, Taj Hotels, all these traditional businesses. फिर suddenly west में Uber, Airbnb आया, उसने बोला okay भाई, asset is yours, service is yours, I'm gonna provide the technology, you know and those businesses saw massive scale. क्योंकि asset or services were the most critical part. ठीक है, let's say your the first business we talked about grows at X CAGR, every year it grows at X pace of X. And these businesses came in and they said, we're going to grow at 100x, boss, because assets and services we are going to probably outsource. Our only job is technology. We are going to match demand and supply through technology overall, and business is gonna grow crazy 100x. So people thought, yeah, maybe India, maybe this is gonna work. But when I look at all these service focused, low stack, these businesses are called low stack, where only technology is the key. I don't see any tech only marketplace kind of a model scaling in India. To my mind, I don't see any only focused business which has done well. Recently, Oyo thought it's doing well. Oyo is also moving to a flagship model where they want to control the service layer. Flipkart moved to marketplace. Then the whole management went and they want to do inventory again. Uh, there's a reason why Airbnb, BNB has not taken off in India, because that whole service layer is broken. When you're in New York, you know you're gonna get clean linens, you're gonna get clean towels. You don't expect that kind of service in India. So at least in my mind, I believe that service layer is broken. You need to control service, and that service control depends on category to category. And those models are called thick stack models. So Tribo is a thick stack model, the Tribo hotels versus Oyo, and Tribo controls that service layer. There's a lot of, I think there's a Roorkee team called Tube Bus. So they are also trying to do the same stuff. They're saying, okay, boss, you give me your bus. I'm going to build a service layer on top of it. I'm going to increase the utility. So I think maybe, I may be wrong. That's just my own thesis that maybe thick stack is the way to go in India. And product, yeah. Talking to a lot of people, even they also think that I don't know, there is no product startup in India today. There's a bit of service element isn't what, maybe that's the reason, because the whole service layer is broken. So I think that would be the answer. Yeah. uh, so there is an interesting question on what, according to you, is the fate of Flipkart and similar e-com giants, looking at the way they're burning cash, and how will it affect the economy of India. See, one thing, guys, Flipkart recently went through a lot of media rant. So what you read in media is not necessarily right. I don't know how much you know of the Flipkart numbers, how much do they burn. I don't think they, right now, I don't think that, they have lost a lot of market position. See, I don't know. I mean, everybody is grappling with this question. Would Amazon be the sole player in the market, or there'll be two with Alibaba coming in? What will happen? I think time will tell. I really don't have an honest answer to predict what's gonna happen. But at least being at Flipkart for a long time, I know, I think they should be there. I mean, maybe it's the nostalgia in me which is saying, I don't know, man. We'll have to see. And would you invest in a startup covering less value but more volume? See, यार, अगर volume is high, you will already command a higher multiple. Why not? So volume and value goes hand in hand, right? If you're already commanding a lot of volume in the market, in any way, you're capturing a lot of market share. And to be honest, those startups are better because they are spread across more consumers. If you say I have two consumers which give me $100 billion, no, yeah, it's okay. Those two consumers get angry tomorrow and get out of your system. But if you say I have 100 million consumers transacting with me at $10, yeah, that's a better business to me, because that's more defensible. Yeah. And to be interestingly, I've looked at Flipkart numbers for a very, very long time. So there was this internal target within the organization to drive average order value lower. because that means our volumes are increasing. That means we are increasing our penetration in tier 2 and tier 3 cities, because that guy, again, I told you, right, the first consumer that comes, he buys low ASP products, probably categories like shoes, t-shirts. So if your AOV is getting lower but your revenue is going higher, that means your volumes are better and you're adding more consumers, which is better. So there is an internal target to drive average order values lower. So you're better off at larger volumes. So WhatsApp is a classic example. Yeah, they didn't monetize at all. They grew to so many volume. WhatsApp today says, boss, I'm gonna charge $1 per year. I'm sure everyone's gonna pay with the kind of, and they would be at $700 billion of revenue if I'm not wrong. That was the last active user base of WhatsApp. Yeah. So that answers that. Yep. Ajinkya, I hope I've answered all questions or entrepreneurship or related or anything, or am I missing something? Yeah, NBFCs will be there. See, 400, $500 billion its market may everybody will be there, and don't worry if you're building a loan product as a startup, even if you get 5-6% of that share is very, very good. So don't worry about NBFC being there. Yeah, NBFC traditionally is a financial services business. Why would you want to start an NBFC? It's like taking money and investing. I mean, to be honest, it's like a commodity business that you are entering into. Unless you're building technology to score people better, to provide value adds to NBFCs, that okay, I'm gonna do better KYC for you. I'm gonna help you score consumers better. Right? Do you understand, right? Civil won't score any of you guys. The bureau in India won't score any of you guys because CIBIL only scores through repayment data. So you should have taken a loan to be able to eligible for CIBIL to score you. So there's a whole lot of problem around how do you score people like you and me who come into this credit economy and we will need credit. Okay, you get good jobs out of IIT, but there are a lot of people who don't. But that doesn't mean they're not credit worthy. So there is a whole lot of alternate data coming into play that I'm gonna read all your SMS messages, all your LinkedIn, all your Facebook, and determine your credit worthiness. So those are the models where you will see NBFCs maybe adopting a lot of solution. ठीक है. Okay. Okay, I'll answer this question as this investment analyst thing. So look, it happened. I didn't think I had a shot. So to be honest, so I was very happy with Flipkart. The role I had, I was in FPA team, financial planning and analysis. So every month I used to make the Flipkart P&L, right, from visits to cash burn to working capital to margins. I was happy. I mean, I've seen Flipkart grow 6x in front of my eyes. So I had an inbound interest from a VC firm. They were interested in my profile that you have some e-com experience. I think this will be very relevant for startups. Maybe then I thought, oh, maybe I have a shot. That's when I applied to a lot of firms out there, and I had offers, and I chose to be at Kalaari. At Kalaari, see, the role of investment analyst is very different at different firms. At least that's what my understanding is. So if you look at SEF Partners, which is in Delhi, their analysts are DU grads. So they do only research work, back end work. I mean, that's my understanding. I may be wrong. Uh, uh, there are other firms where you get only get to do sourcing part, wherein your job is to just be out there, source deals from your network. You don't really get to do post investment part. But with Kalaari, the experience has been really good. I mean, I get to do a lot of things, from sourcing my deals to working on the transactions to building thesis around investing into them, working directly with partners, helping them in the analysis they're doing. Also, when the investment is done, helping partners within the journey of the investment. There's a lot of data that comes in. We have to analyze it, see if we can connect them to somebody that may be of help. Uh, you have to also take initiatives on your own that, boss, this is what I am thinking. What do you think? We should do work on this. We should focus on this sector. So it's a very, I think the learning has been amazing for me. In the last 1 year, I've learned a lot of things, met a lot of people. Uh, that's the best part about this job, that you have access to so many people. I mean, so many high profile people. Believe it or not, I had lunch with Ratan Tata. I mean, I was just sitting next to him and he was just having lunch beside me. I was like, dude, this is the stuff. I mean, those are some of the perks. Uh, yeah, yeah. So that would be it. And if there are questions, we can certainly take offline. You can write to me. Uh, okay, I have this question on. Uh, UI UX thing, because see, when you looked at traditional offline businesses, what were the customer touch points? Your shelves in the department store, your retail outlets, how they looked, your customer call agents, how did they talk. But when you're talking about completely online business, what is the customer touch point? Your app, your website, and that's when the whole product thinking comes into play, right? There are teams at large startups which are driving a single piece of the whole transaction process. So if you look at the order funnel today, someone comes, that's counted as visit, right? Then they spend some time, that's counted at average time spent per session, right? And maybe about 2-3% of them end up adding something in their cart, or maybe I think 5%. Then some of them go to the payment page, then only some of them transact. So there are big teams within these big organizations which are targeting one single element of that piece. So they are thinking, okay, if there were 100 people who added to the cart, why did 50 went ahead? Maybe something is wrong with the pricing. Maybe the whole, payment process is flawed. Maybe we are facing challenges with, the UI overhaul. People don't know where to click, where not to click. So that's when the whole product management industry has evolved. Where to place, which button should be placed, what button should do what. So this whole process is seamless because that's your consumer touch point, and you don't want to lose your consumers. UI is very important. I think there's a trend in Valley today that I think the highest paid engineers in Silicon Valley today are the guys who do UI UX. Yeah, rural people, we just we just spoke about fintech affecting agri credit, agriculture. I think there's a lot of work. These see, there's one thing I'll tell you. Even today, India has about I think 500 million users, if I'm not wrong. Only 50 million are transacting users. So not all of them are transacting today. All of them are using, they are online. They are online on smartphone, probably, texting on WhatsApp, probably watching some video on YouTube. But there are only 50, 60 million of them who are transacting online. We're using online as a way to buy something. So 750 million users not going to be the guys who are going to buy online. They're going to be online, but only I think 150, 200 million are going to be transacting with you. So I'm not sure if a all whole lot of rural users would be transacting with us, the new user that are going we are going to add. I don't know. We'll have to see how many of them will transact, right? And I think if they will transact, it is going to be around agri. It is going to be our financial services for centered around their needs. Maybe health insurance. I think it should be around fintech and agri tech. That would be my guess. And what startups will change the structure of their platform for those two users to better user experience? Yeah, that's already happening. There's a lot of vernacular touch that are there. The apps are available in multilingual languages. So there is already a big push towards having your platform being vernacular, differently designed. And that's when, I think Flipkart does have a shot to, design this whole platform in a way that next 400 million Indian users who are sitting in rural areas probably would want to transact with Flipkart. Have any of you guys seen Chinese websites? Go look at them. They are like very sharp, vivid. I mean, I find them very sharp and vivid. Lot of colors flowing around. It's not neat. So that's already you are seeing a differentiation where Chinese users are better off at transacting with this kind of interface rather than transacting on Amazon. Maybe that's one of the reason. I'm just hypothesizing, right? Yeah, so I was answering this question on which startups will change the structure of their platform uh, uh, to users to have a better user experience. Hmm. And there is a question around that KPCB predicts that VC firm will have design profiles. I'm sure. So see, VC firm, I'll tell you what how they work is there is an investment team, right, which takes care of investment. So like I'm part of the investment team. Now there is a portfolio services team, which will have a technology. I think larger big VC firms would have two, three tech people in the portfolio services team. There'll be guys in marketing, there'll be guys in HR, there'll be guys in finance, legal. So their job is to help that company, get all of their problems around HR, finance, and everything answered from this team. So they are portfolio services team. So I'm sure when UI UX becomes really critical, there'll be a guy who's a UI UX expert within a portfolio services team. So any startup who is a portfolio company needs some advising, right? This guy comes in and helps them out. Yeah, so that would be it. Yeah, so the org of VC culture. So there's investment team, portfolio services, and the admin team. Admin team is typically the guys who help the investment team in making sure that things are smooth, everything is in place. They include all our assistants and stuff. So that's typically how VC org works. Yeah. Yeah, I think I've answered most of the questions. If you guys want to know anything in particular, please type it here or you can speak up. Yep, that would be it.
Okay, thank you, Yash. That would be it. The discussion was really insightful,
Yeah,
and
you can always write to me. You can always contact me if there's anything I can be of help. Uh, and keep on doing this stuff, man. It's very important that you guys network out
sure,
there. And sitting in Nurki doesn't help. Trust me. I am very. There's a lot going on out here that you should know. Yeah, so I am at yashjain.iitr@gmail.com, and or you can contact me at yash@kalaari.com.
sure. If you have some really good articles that can be posted, so share them in the description of the YouTube video of the
So,
Hangout
so,
webinar.
so read about this guy, Bill Gurley. He's a partner at Benchmark Capital. Fantastic guy. His blog is above the crowd. He writes
Okay.
wonderful stuff. So you should really look him up. And Andreessen Horowitz is big on a lot of content out there, especially about VC. So they are worth. So they have a podcast series, 360 Movies, which is very good. You should. And we guys are also publishing a lot of stuff lately. If you follow our Twitter, our YouTube channels, I also sent you a link of article that we recently wrote on fintech. So keep following our social media handles. Kalaari is very big on thought leadership. So we whatever we discuss within our doors, we tend to push people publish that out. We'll keep on doing that.
Sure, yes. Thank you. Thank you. Thank you so much.
Thanks.